Hello and welcome everyone. I'm Stephen Cole and I'm honoured to be the moderator for today's webinar, which we've called the LNG Landscape in 25, the challenges, the opportunities and the emerging trends. We're hosted by the Al-Attiyah Foundation in partnership with London Stock Exchange Group, Data and Analytics. But before we start, just a few housekeeping rules. For the best viewing experience, please read the instructions above the media player. For any technical issues during the webinar, please refresh the page or reach out via issuerservices@lseg.com. For any questions for the speaker, you can always click on Ask a Question. And please note, in the interest of time, we may be unable to address all the questions with the speakers. And during the session, you'll be taking part in polling questions. The recording of the session will be available using the same event link. Those are the guidelines. And now I think a little bit of context. There's no doubt the global liquefied natural gas LNG market is entering a pivotal phase, with supply rising as new projects come online and recently commissioned facilities increase output. To match that, demand is accelerating, particularly in Asia, fueled by industrial decarbonisation, electrification of heavy transport, and broader geopolitical and technological shifts. Woodside Energy, for example, projects a 50% rise in global LNG demand in 5 years' time, while Shell is forecasting a 60% increase by 2040. The MENA region, as we all know, is well positioned between Europe, Asia and Africa, and that makes it a key supplier of LNG to the global markets. Meanwhile, there is what I would call a quiet revolution in the maritime sector. Ship owners are increasingly turning to LNG as a cleaner alternative to heavy fuel oil. More than 640 LNG-fueled ships, excluding LNG carriers, are now working or sailing on the high seas. A record 264 new orders were placed last year alone. LNG's role in maritime decarbonisation is now hard to ignore. To meet growing global demand, much of the new supply is coming from North America, but a significant portion of capacity won't be operational until next year or later, raising the possibility of a near-term supply-demand imbalance. Outside North America, construction is due to progress in the Mozambique LNG project, and in West Africa, BP's FLNG Jimmy off Mauritania and Senegal is expected to ramp up to capacity. Yet, the industry's biggest game changer may still lie ahead. Qatar's massive North Field East expansion, slated to begin production next year, is set to increase the country's LNG output by nearly 85%. And a move that could decisively tilt global supply dynamics. So the LNG sector is getting ready for a prolonged growth cycle, with the most promising demand coming from Asia, where some countries are on track to become net gas importers by the 2030s, switching from coal to gas. So we'll be looking at all of that, the key trends and new opportunities, ranging from the impact of global policy shifts on LNG flows to the accelerating role of digitalisation, decarbonisation, and the rise of new business models and supply regions. And to talk about all of that, we have some really top-line speakers, including Bill Farren-Price, Head of Gas Programme, Oxford Institute for Energy Studies, Arif Hirji, Chief Business Officer and Head of Analytics, LNG Centrica Energy, Daniel Toleman, Director of LNG Research, Wood Mackenzie, and Peter Zeniewski, Senior Energy Analyst, International Energy Agency. And Samuel Good, Research Lead, LNG at the London Stock Exchange Group, who'll guide us through a presentation setting the stage for the webinar. So, Samuel, over to you.
Thanks very much, Stephen. Hi, everyone. I'm just going to give you hopefully a very quick overview of the LNG market, kind of just up to the present day, setting the scene and just getting everyone onto the same page for the upcoming panel discussion. So if you just flip over to the next slide. So starting with pricing, we can really start to see the picture of the past season or two. On the left here, we have the history of the front month contracts at Northeast Asian LNG marker, the JKM, and the Dutch TTF gas hub, the latter very much emerging as a primary benchmark in the global LNG market since 2022. And on the right of the chart, we can see the forward pricing curve as of the start of this month. On a year-on-year basis, while the summer has mostly priced higher, with that June spike just after the larger February spike coming from Qatari supply and Egyptian demand concerns during the Middle East crisis. But we can see that flipping later in the season, with the front month pricing coming down from the same period in 2024. And over on the right-hand side of the slide, we can see the evolution of the winter 25-26 contract over the course of this summer. While the overall shape of the curve is not too dissimilar to the front month trading pattern over the season, including that late June spike and the prospects of a much tighter summer, which would weigh on underground gas withdrawals for the coming winter, we can see pricing coming down substantially from the start of summer and holding well below levels seen outside of that late April, early May trough. So while they're dropping in front month and front season contracts at both of these key pricing benchmarks. Just on the next slide. Well, mostly it really does come down to supply. So there is more than little to be said for demand too, which I'll come to in a little second. For the past few years, especially since the slowing of Russian pipeline gas supply from late 2021, the market has looked to the incoming next wave of liquefaction capacity growth, as Stephen alluded to. While we've seen some delays to that, most notably in the US, it is fair to say that the market is finally starting to see at least the early part of this wave, which you can see coming through at the end of the chart on the left. Looking at supply side growth this summer, which you can see on the right-hand side chart, showing a combination of loading so far this summer, as well as the LSEG forecast for September, looking against summer 2024. It's fair to say that much of this is coming from one project, the Plaquemines LNG facility in Louisiana. Now, I think many were expecting a fairly quick ramp up at Plaquemines, but it's outpaced at least most of those projections, especially as it looks to 140% capacity utilization quite so early as some of these liquefaction blocks. Now, it's not alone. The stage 3, the Corpus Christi expansion coming online over 2025-26 also supports growth, as does the non-recurrence of the major Freeport downtime we saw last year. A notable mention also goes to LNG Canada, which is set to continue ramping up after its midsummer start. But it's not just new liquefaction capacity. With the lift and feed gas supplied to multiple projects, it's also helping to support loadings, most notably at Nigeria's Bonny Island, after successive years of slower exports, although in the last few weeks that has slowed somewhat. So just turning over to the next slide, and flipping over to demand as we do, it's not too surprising to see a similar overall growth trend, especially as, like last year, we're not seeing the same short-term fundamentals dislocation that causes that late summer, early winter floating storage, which has been seen in previous years. Demand side growth has come mostly from Europe, with LNG helping to meet the shortfall left by the cessation of Russian pipeline gas supply by Ukraine, as well as the greater summer injection demands following last winter's stock depletion. The region has been joined by Egypt, which has continued to see a decline in its domestic gas production. But Chinese demand has continued weak, squeezed by continued domestic gas production growth and pipeline imports growth on the year after the Power of Siberia reached its contractual plateau late last year. So just to sum up, a strong, although at least on the demand side, a strong Europe and a weak China. And then on the supply side, pretty substantial growth has limited competition between Asia and Europe, with US LNG being priced to Europe for much this summer, and Asia mostly holding just enough of a premium over Europe to pull most supply from other closer export regions.
Sam, thank you very much. That's an excellent outline of what we are going to be talking about today. Just a reminder to everybody, Samuel Good, Research Lead at LNG at the London Stock Exchange Group. So let's move on to our first poll question. And that is, what recent development will have the most significant impact on the global LNG market in the next 12 to 18 months? A startup of new liquefaction capacity, for example, North America and Qatar. B, rising LNG demand in Asia. C, increased use of LNG in shipping and industry. And D, delays in major LNG project timelines. So A, B, C, and D, startup of new liquefaction capacity, rising LNG demand in Asia, increased use of LNG in shipping and industry, delays in major LNG project timelines. So what do you vote on those? Which one you think will have the most significant impact on the global LNG market? There are many developments happening, as we say. That's the reason for today's webinar, really. Among the key developments I see is the rising adoption of floating LNG, FLNG infrastructure, which of course offers a more flexible and lower footprint alternative to onshore liquefaction. And that capacity has now risen to 14.35 million tons per annum early this year. And that's according to the International Gas Union, with more projects proposed across 15 countries. So while we wait for that, what I'll be doing is asking Peter and Sam for their reaction to the poll. And I think, as we've heard from Sam first, I'll be going to Peter to ask him. Peter, just checking you're there.
I'm here, Stephen. Thanks very much.
Excellent. What's your forecast? Which one do you think is going to have the most significant impact? See if everybody agrees with you.
Yeah, well, I don't want to prejudice the outcome of the polls if anyone hadn't voted yet. But what I find to be an immense game changer for the next 12 to 18 months and also beyond out to 2030 is, of course, the rising supply of LNG from all these new projects. We've looked at this for several years here at the IEA, and we've never seen this amount of capacity coming online in this short a space of time. So that really is, the backdrop to everything is all this new LNG capacity coming online. So I would definitely go with A.
I'm going to interrupt you. That was your choice, rising demand. Well, not everybody.
I'm sorry, it was startup of new liquefaction capacity, A.
Well, you're right. You've hit the target. So startup A, 71%, B, 14%, C, 0%, and D, 14%. So Peter, briefly, your reaction to that?
Yeah, I think that's more or less on the money. As I mentioned, big changes in capacity. That's going to upend the market in many different ways, which we can, of course, discuss in this session. Rising LNG demand in Asia. Obviously, a lot of expectations about Asia's capacity to absorb all of that new capacity, but real questions are kind of opening themselves up when you look sort of at sectoral trends, at country level trends. Where exactly will all this LNG go? So very much those first two kind of frame the whole discussion around LNG currently.
Okay, well, there's obviously a consensus on that. Sam, your reaction?
Honestly, couldn't agree more. I think the state of the market as we move out of this kind of a much tighter Europe, especially, which is basically just told that the market was still at pricing level for much of the past 3 or so years. As we kind of move away from this, I think it's pretty key, that kind of startup, and also how much they're delayed or not delayed as well. I think it's fair to say there's a bit of a price premium, especially when we kind of look to summer 26 and beyond. There's still a bit of a price premium, basically because of that risk. That's kind of looking down to option D. You do have delays in major projects timelines, and so this kind of we face these small little issues in the commissioning process. I can think of a couple of LNG terminals this year which have suffered with that as well. But then you also do get kind of like longer term major pushbacks, especially at a time when there's a lot of LNG being built. There's not that many people who can build it, and so we kind of see and have seen constraints on the EPC side for at least a couple of years now, and that doesn't look like it's going away right just yet.
It doesn't. Sam, thank you. Let's go to some of our discussion points today, beginning with what you think the most pressing risks and promising opportunities for LNG stakeholders are this year, 2025. Perhaps starting with the risks, the most significant geopolitical risk that could disrupt LNG supply chains, and how stakeholders can mitigate those threats. And let's go to Bill Farren-Price. Just a reminder, Bill is head of gas program, Oxford Institute for Energy Studies. Bill.
Good morning. Thanks very much, Stephen. Yeah, just following on from Sam's point, I think the biggest risks are actually not geopolitical; they're economic. It's rising costs and the potential for delays to new projects. We've already, I mean, delays to new LNG is not something unusual. We've seen that across the history of LNG, and even with the projects that are doing very well and delivering more or less on time, we've seen delays at Golden Pass. We've seen even ramp up delays at Plaquemines, which is accounting for a big chunk of the incremental supply this year. So that's not unusual. I think the macro risks need to be taken into consideration. There are issues around labor availability to complete projects. There are issues around sticky inflation that could keep interest rates higher than otherwise. And I think when you look at all of these new builds, they need to find a way to edge their way into what will become a more competitive supply market. And I think price is going to be key to that. Now, if you look at the forward curve that Sam showed at the very beginning, you can see that the overall trend is downwards, which reflects this growth in supply. If there are delays, we would expect to see that forward curve flatten off a little bit and not see possibly the decline. So price is really important here.
Price is money's key. Price are important. Daniel Toleman, your reaction to the risks and opportunities?
Yeah, I'd agree with that. I think the big risk of that delay obviously is an opportunity for the sellers. And if you've got length in your portfolios, you can maybe take advantage of higher prices for a little bit longer. I do see a world where LNG prices stay high through 26 and 27, and that rebalancing really happens in 28, 29. Another opportunity I see is new capital coming into the sector, especially in the US. We're seeing private equity, private capital coming in. We're also seeing Middle Eastern players come in, and this has really allowed a lot of new projects to take FID and to move forwards quite quickly. Now, what does this mean? In the medium term, I think we certainly get a softer market, lower prices, and then you have another opportunity for the buyers, and how quickly do we see that demand respond? And I think when prices drop, we will see a real significant demand response in Asia.
Peter, how can stakeholders mitigate these threats?
I mean, look, there's a lot of different ways to sort of guard against price risk. Long-term contracts with oil indexation prices are one way to sort of hedge. Developing a portfolio of spot market sales and term contracts is obviously kind of the bread and butter of the industry. But I just wanted to sort of go back to the point. I mean, first about sort of the project timelines and the delays and so on. I mean, so just to put some numbers around this, there's 300 BCM per annum of new capacity coming online in the next sort of 4 or 5 years. Now, of course, we're used to sort of project slippage in LNG projects. These are big capital-intensive projects. A lot of these projects are in the United States, however, so about 160 BCM. That, the US is pretty good at getting projects in on time. I mean, we've seen a couple of delays here and there. Obviously, Freeport has had massive issues, with the fire and sort of getting up to sort of full capacity. But, actual commissioning and ramp up has been rather quick at these projects. So Venture Global is a good case in point. And so, of course, there's risks. But even if we assume a bit of project slippage, that's still, a window where, there's a massive amount of supply coming online. In our projections because we track this, we have an LNG tracker online that people can go look at. This 300 BCM doesn't even count some of the projects that we kind of discount based on sort of force majeure. So let's say, in Mozambique or Arctic LNG 2, which is still sort of operating under a sanctions environment. We've seen a few cargoes make their way to China, but we've discounted a fair chunk of that capacity coming online. So, in terms of how the market sort of prices all of this in, I don't think that, delays are going to make a massive difference to the huge downward pressure on prices that we're going to see. And so I think one of the key questions here is, what's the ability of the market to absorb all this volume? Because we're struggling to place it ourselves. And I'd really like to hear sort of other views around the table about, where is all of this going? Is it going to be China? Is it going to be within a subsector, sort of transport demand or power or industry? And at what price do things start to look attractive to these off-takers? And do these off-takers have the capacity to import more LNG, on a sort of long-term basis as well? And what are the contracts underpinning all that? I think those are the interesting questions, I think, for a lot of the sort of market observers over the next few years.
Okay, anybody else on the panel want to answer some of Peter's questions?
Yeah, I think sorry.
You go,
Bill.
Carry on, Bill. You're first up.
Thanks very much. I agree with that. The question is, how soft do prices get, and at what point do we see a real trigger for an uptake in South Asian and Southeast Asian demand? This is kind of crucial. And is it low enough? Because currently prices, what LNG is around, Asian LNG is probably around $11, something like that. If we see prices come down to $6 or $7, we may well trigger a significant uptake in demand. But the question in my mind is, are these prices going to be sustained long enough to trigger a strategic change in approach to LNG, where you see considerable build out of receiving terminals and midstream infrastructure that would put gas back in a sort of strategic position for a lot of these countries? And that's an unknown at the moment. And so, yes, there'll be opportunistic buying, definitely, if we see lower prices, China particularly. But I'm not convinced that it changes the big picture longer term. And that's the big unknown that we're kind of grappling with at the moment, is what happens beyond 2030. Do we see this structural oversupply continue, or is this just another cyclical factor, as we've seen so many times in commodity markets?
And staying with this issue, somebody else wanted to come in on Peter's point.
Yeah, I'd like to come in with a slightly different angle, that I actually think that what we see in a cyclical, opportunistic market, when the prices drop, actually the demand seems to have multiple way of adjusting itself. So, for example, we never saw before or imagined that floating LNG terminals would come on that fast. Everyone thought it would come out fast, but not that fast. So that means that when you've proven something once, then I think many people can follow. The other aspect is how much spare or unused regas capacity is there. So Bill mentioned, and other mentioned also, China, and there's a lot of unused capacity. And given the potential growth, and if we look at maybe 3 years out, maybe it's very difficult to see in the 12-8 months. But then if you look at the 24 to 36 months, there's plenty of possibility of then reacting to a lower price as well. So I think that's why it makes it super interesting. If you combine the capital, which will come into the markets, you combine the part that the world is more connected now, and then you combine, strangely enough, the geopolitical risk, actually LNG then is an interesting aspect of how you can bridge all of that. Yeah, so that's just a nuance I'd like to share. Thanks.
Yeah, that's a beautifully nuanced answer, Arif. Thank you. I think we're going to move on to the second poll now, and ask the question: what is the biggest current challenge for LNG project developers? And you have 4 choices, A, B, C, and D, as always. A, project cost inflation and supply chain constraints. Difficulty securing financing amid market uncertainty. Geopolitical instability and trade disruption. Environmental and regulatory pressures. So there's the 4. The biggest current challenge for LNG project developers: project cost inflation and supply chain constraints, difficulty securing financing amid market uncertainty in some places, geopolitical instability and trade disruption, environmental and regulatory pressure. And there's no doubt the pressures are growing in some parts of the sector because LNG is undergoing, I think, a profound transformation because of digital innovation and decarbonization. And the world is grappling with those dual imperatives of ensuring reliable energy supplies and the sort of elephant in a room always, the green agenda of reducing emissions. So with those, LNG's role, I think, in the global energy mix is set to both expand and transform. But Arif, what's your tip for this second poll, the biggest current challenge for LNG project developers? What would yours be?
Well, now we have to see where we are exactly currently now. And if you heard what Peter just said earlier, that half or even slightly more than half of the new LNG coming on is from the US. You only have 2 points of risk remaining there. One is that can you get it online and can you get that financing all the way over the line? But otherwise, it looks pretty good. So therefore, despite what many people think, could it be finances? No, I actually think it's much more, can you sustain the project thereafter? Will the demand be there? And that's where the instability, trade disruption really comes in. I think many people haven't looked at that. You're saying project's going to come on, and that's fine. But I believe the geopolitical uncertainty is there. And it's not something to take lightly, actually.
Exactly. Well, the answers pretty much follow what you're saying, Eric. A, 22% project cost inflation and supply chain constraints. B, difficulty securing financing amid market uncertainty, 33%, and that's tied to a mixture of geopolitical instability and trade disruption. And fourthly, at 11%, environmental and regulatory pressures. So a diverse response to that one, but equaled with B and C. Sam, your view of that?
Yeah, I would agree with Arif. I think a couple of years ago, especially given how much this is in the US, I probably would have said D. But obviously, with the change in presidential administration, I don't think we're seeing that quite in the same way, at least on the US side. I do think it is still a thing. That kind of does relate onto kind of which markets are the long-term markets. Historically, we've kind of looked at Northeast Asia for a long period of time. That's still going to be kind of the vehicle. I think, at least in the near term. We will see a little bit coming through in Southeast Asia, but yeah, I think looking to kind of what comes afterwards, especially as we kind of look to really constrain that on the European side in particular. We've had a massive growth of European LNG demand. Is that sustainable in the long term? Probably not. But yeah, we'll kind of gradually see that decline. So yeah, I would completely agree there.
Are you surprised, Sam, that only 11% thought that environmental and regulatory pressures would be a challenge?
To some extent, yeah. I mean, like I said, this was a hot topic, at least on the LNG supply side, a couple of years ago, especially as the kind of Biden administration looked to just tighten up and they paused project approvals. But we've seen that very much unwound, especially in the last couple of days. And yeah, we kind of it's back to plenty of new deals. I think there's 2 announced last night. Conoco and the EQT signing on for 1 million tonnes per year. So we're very much out of that. There is a kind of the long-standing questions around more on the EU side, especially in terms of kind of like methane regulations in particular, things like CBAM, etc. And they will become the things as we move forward. And it's also, I would also say, I mean, it's not a huge part of the energy market right now. But LNG bunkering is increasingly going to become kind of quite a sizable thing, especially in certain kind of key markets, that kind of like Northwest Europe, Singapore, Yangtze River, etc. These will become kind of key LNG bunkering hubs, and that will start to have quite a notable impact. So shipping and IMO-based regulation will definitely kind of start to play more of a factor on the LNG side than at present.
All right, thanks, Sam. Let's move on to the second discussion point. Another question: how are global policies and shifting geopolitical alliances affecting LNG trade flows? That's a pretty wide-ranging question. So we need to sort of narrow this down, I think, a bit. Bill, Farren-Price, your reaction to that?
Thanks, Stephen. Yeah, I think well the big geopolitical news is twofold. One is we've started to see a re-engagement with China, with Russia, in terms of increasing both pipeline flows, but also potentially the sanctioned Arctic LNG 2 project. I think what this means is that China's building an awful lot of gas optionality. It's very difficult to know until we know what the terms of these projects are, the pricing, the take or pay, and everything else. But it seems to me that China's interested in getting access to discounted pipeline gas, also potentially LNG, and I think that may limit how much LNG they need, incremental LNG they need to pick up at global prices, because I think that a lot of the Russian molecules will be cheap. So that's one element. I think this was always going to be, geopolitics was always going to be a feature, that there is going to be a world post-Ukraine where Russia returns to the market, presumably in some shape or size, and I think we have to bear that in mind. And then probably I said 2 points. I'd say 3 points. The third one is the sort of what I term the sort of weaponization of gas that has been introduced really by US trade policy, the determination to build into trade deals commitments to offtake LNG, and the linking of that trade flow to other terms and conditions around tariffs. And I think that there is potential disruption from that, depending on whether these arguments are seen through or not. And that also links to the environmental and regulatory alliances, or lack of them. So I think that there is the potential for disruption, the potential for things not to run smoothly in terms of this huge expansion that we've talked about. And I think that those things are in the works and are playing out right now.
I want to stay with you just for a follow-up. Sort of, how disruptive are tariffs? How can people forecast and plan when tariffs seem to be, correct me if I'm wrong, so random?
Well, that's the question well beyond the scope of this webinar. But what I would say is that, like I say, it's the linking of energy trade with broader trade questions, geopolitical conditionalities. I think this is not helpful to the free functioning of a big commodity market, particularly one that's growing. And these things may pass us by. They may, in history, turn out to be less consequential. But right now, from the view right now, when you see the US seeking to link energy trade commitments to politics, to around Ukraine, around lots of other things, then you have to ask yourself, how positive is that for the health of the long-term gas as a fuel in the energy mix, or indeed LNG as the most internationally traded component of gas.
Okay, thank you. Arif, do you want to come in on this, the shifting geopolitical alliances affecting trade flows?
Yes, we can already see more than the early signs of these. Look, LNG and crude are joined together in many ways, not only about how you price and index, but it's also the question of replacing. Often people discuss about gas replacing coal, but it's important to understand also that a lot of Asian economies are oil dependent, and as when you can transfer over industry and electrification, not from oil as an underlying heat, but using gas, it's an important aspect. And therefore, to look at the countries which are the most populated is key. Demand drives there, and the major three areas which are most populated are China, India, and then Southeast Asia as well. And what do we see? We can see that in this middle of this tariff chaos, or massive news of tariffs and what will happen vis-a-vis India, will India budge, not budge? What do we see? We see BRICS conferences, and we see alliances which are there. And not only there, I think that there was an agreement to use the rupee, for example, as one of the underlying currencies. This was not the case only half a decade ago. So it's quite things which are changing, especially on how you see those alliances. Now, how that's linked to geopolitical issues related to Ukraine, Russia, as well as Middle East. Of course, there are some correlations there as well. To answer your first question on how do you manage that, how do you go about that, how can you forecast? You can't. The only thing you can do is a bit what Bill said. Can one forecast what the alternative flows are instead? Would, for example, these tariffs mean that Russian molecules, barrels, go somewhere else and continue to go, and you have replacement of where the trade flows go? And that's a very, very hot topic which the whole market is analyzing day and night.
Okay, thank you, Arif. Daniel Toleman, Director of LNG Research at Wood Mackenzie. Your reaction to the geopolitical alliances affecting trade flows?
Yeah, I'd like to follow on from those points. I think one of the key dynamics in the market that will change is with the rise of US LNG, that'll be the price setter longer term. Now, if I look back across the last 3 years, the merit order of buying LNG has been quite clear. Henry Hub linked LNG was the cheapest. Brent was the middle. Spot price was the highest. As we go forwards, that's going to flip on its head. Spot prices will be the cheapest. Brent the middle. Henry Hub is probably going to be the highest. And so we're going to see Asian buyers who predominantly in the past have bought LNG linked to Brent. They're going to be looking at spot. They're going to be looking at US LNG as options. And another part of this story, many of the traditional buyers have purchased rich LNG, so high heating value LNG from places like Malaysia, Australia. All the LNG that comes out of the US is very lean. It's around 1030. And so there's going to have to be a big reaction in the market as to how these buyers manage that going forwards. So some slight changes that we're going to see in terms of contracting, pricing dynamics, and then also how buyers adjust to this big wave of lean LNG that's coming into the market.
Okay, thank you, Dan. Let's go to the third poll and ask the question, what is the top factor influencing LNG demand growth in Asia today? A, power generation needs and electrification. B, industrial fuel switching and decarbonisation. C, heat waves and weather-related demand spikes. Or D, infrastructure development. That's terminals, pipelines, etc. So there are your four options, the top factor influencing LNG demand growth in Asia today. And that would include China. Sam has already said weak Chinese demand at the moment. I wouldn't mind knowing if anybody could see that changing in the near future, but then you probably all need a crystal ball for that one to have a look at the Chinese economy. But anyway, the top factor influencing LNG demand growth in Asia today is the question: power generation needs and electrification. B, industrial fuel switching and decarbonisation. C, heat waves and weather-related demand rises or spikes. Or D, infrastructure development, terminals and pipelines. You could almost ask another question: is the LNG trade map being redrawn because of shifting alliances. And Arif was talking about alliances. I would call them alliances of expediency, personally. But I'm sure he would agree. Maybe not. Among the Asia-Pacific nations, and they would change as times change and as expediency demands. The Middle East and North America. I'm thinking of China and India in particular, diversifying LNG sources to mitigate those geopolitical risks, while traditional exporters like Australia and Qatar vie to maintain and expand their market share. So, Dan, I'm looking at you for your prediction on this one. The top factor influencing LNG demand in Asia today, which one's it going to be?
A and B are definitely the leading contenders. I'll also put an E in, which is declining local supply in Asia. So when we look at our gas supply, there's only one country in Asia where supply is growing, and that's China. And it's really this big fall of domestic supply that drives a lot of LNG demand. So power one, industrial two, and then E, declining local supply is the other key driver impacting LNG demand. Sorry to go outside the poll questions.
Well, then I'm just writing down E, declining domestic demand in China. Sorry, it's not on your list, so it'll have to be A, B, C, or D. But I'll come back to you, Dan, to see what the response is to that. Why should that be weak domestic demand or supply?
So just legacy supply fields in many countries in Southeast Asia and South Asia, there has been a lack of investment, and as a result, we're seeing that supply decline. So gas demand is still growing, but what we see is with that supply coming off, LNG comes in and it fills the hole. So your demand, yeah.
Let me go to the answer. Fairly overwhelmingly, it's A, power generation needs and electrification. B, 44% industrial fuel switching, which is, I interrupted you, what you're talking about, and decarbonisation. And forget heat waves and weather-related demand and infrastructure development. They're both 0 and 0. So Dan, top of the list, power generation needs, electrification. No surprise there.
Nope, not for me. Certainly, we're going to see a strong amount of LNG demand growth from power generation.
Okay. Anybody else want to come in on the results of that poll?
Yeah, I would. I would add an F, which is price. Price is going to be absolutely critical to whether you grow demand or not in Asia. And the other point to make is I'm not sure I agree with industrial fuel switching. The reality is that China and India have a huge amount of coal, which they can deploy as in place of gas when it's affordable enough. And I think that is one of the limiting factors on growth in Asia.
Okay, lovely. Thank you very much, Bill, and everybody's reaction to that. 56%.
Yeah, add a little bit there, Stephen.
Yeah, Peter, carry on.
Yeah, no, I'd like to maybe just connect, the points Dan made about sort of lower domestic supply and what Bill said about price. I mean, that's all sort of spot on in my view. And then once you have that sort of frame of reference, you can go down this list and sort of see where, at a country level basis, some of this sort of demand response can come through, given, lower prices. And then you think to yourself, okay, so, what about in India? So where do we see sort of massive demand growth in India? I mean, at the moment, it's been driven by the refining sector. They're refining more oil, so they're using more gas as sort of refinery gas. They're using more gas in industry. That's partly sort of constrained or enabled, if you like, by city gas distribution networks. So more sort of demand is making its way, more pipelines are making their way through India. So connecting sort of smaller industrial complexes and so on. But these are very price sensitive buyers, as we know. So, not a lot of them will pick up an LNG cargo as such. In India, you have to pool it. Fertilizer producers have to pool their supply with domestically priced gas, which is much, much lower. And that sort of speaks to Dan's point. All this domestic supply is coming offline, but it was very, very cheap back in the day. Pakistan, Bangladesh, Thailand, all of this gas is declining, but when it was being produced, it was produced relatively cheaply. And so if you look at the curve for Southeast Asia, demand and supply were sort of growing in tandem. And once sort of domestic production sort of tailed off and plateaued in the 2010s, then you saw a massive amount of coal coming into the systems in Southeast Asia because gas was no longer sort of available and cheap. Now, whether LNG can kind of step in and say, hey, you know, like, I can offer you a competitive product. But off-takers will say, well, we've been paying $4 or $5 an MBTU for domestic gas supply. Now you want us to pay $8, $9, maybe $6, maybe $7, as Bill said at the start, when the wave sort of crests. Is that still enough to kind of get them sort of enticed? And if it is, are they going to sign a 15-year contract? Is this durable demand or is this opportunistic buying? I think those are all the kind of questions that need to frame this discussion of A, B, C, D, and primarily A and B. And that's something that, we're thinking about very, very intently as we kind of run up to produce the next World Energy Outlook is where all this is going to go.
Okay, Peter, thank you. Let's move on to the third point, emerging regions, and which ones are becoming significant LNG suppliers, and what that means, or how does it impact on market diversification. And I want to go to Dan first on this one. Daniel Toleman.
Yep. So from my point of view, the main areas of LNG supply growth are going to be the Middle East and the US. But when we look at emerging markets, there's a couple that we need to focus in on. So Argentina, all of a sudden, is somewhere that LNG is back. FLNG is a big part of this. We've seen 2 projects have taken FID, and perhaps we see more going forwards. The next country I want to call out is Canada. The West Coast is a big advantage, better proximity to Asia, shorter shipping routes. I also think AECO will be at a substantial discount to Henry Hub through the longer term. So those projects have a great opportunity to go forwards. Then the big unknown for me, or the big question mark, is Mozambique. Do we actually see a significant amount of volumes coming into the market from Mozambique? Things are looking more positive for Area 1. However, there are certainly some risks there, but that is another source of supply that could come to the market. And the last one that I'd like to mention, obviously it's not a different country, but could Alaska be one of the new suppliers for LNG? At the moment, there looks like there's some challenges with costs, but potentially it gets away from rising Henry Hub prices and we could see some volumes coming into the market from Alaska LNG. I'm still relatively low in terms of a percentage chance of it coming into the market, but it is another supply source that a lot of people in the market are looking at.
Interesting. I hadn't spotted Alaska, so you're way ahead of me, Dan, but no surprise there. Okay, coming emerging regions, Sam, your reaction?
Yeah, I guess in terms of both emerging and the kind of growth in the ones we've already seen a lot of supply come out of in the last few years, really has an impact on how the market prices. So much of the pricing on the LNG market, obviously everyone talks about the ARB or the basis, etc., which is basically looking kind of how the US LNG netbacks to the US from Northeast Asia, Northwest Europe really sit. Kind of what that means for flows. It's probably the most looked at spreads in the energy market. And as we kind of look at kind of where most of the growth is, we kind of break the global market down into 3 major sections. We don't actually really have very much in the Pacific outside of LNG Canada. You kind of see the Canadian kind of potential growth, potentially kind of pulling more into as a baseload supply into Pacific, but it's really coming in the Middle East and the US, and so basically without much of a real kind of increase in capacity at places like the Panama Canal and also the Suez Canal northbound to get Middle East supply better into Europe. We're starting to see a bit more of a segmentation, especially given where the growth is, and so kind of what that means for regional supply and kind of what that means for interregional pricing is quite interesting. We're kind of seeing a bit more of a segmentation as kind of Middle East supply growth kind of looks to push quite hard into Southeast Asia, Northeast Asia, without kind of more Suez transits on the horizon.
Okay, Arif, do you want to contribute on this one?
Yeah, I mean, if it's when it comes to supply, I mean, not repeating any more countries as such, but I would give a shout out to the one which disappeared early on, but it may come on given both population growth, economic investment, and that is actually the neighboring country to Mozambique, Tanzania. It may come back in again if one were to see that there would be supply, basically. Sorry, enough demand coming out of the rest of the world if the prices are of right nature, and that's because of other sector investments. But otherwise, I would say those are the countries. But yeah.
Lovely, thanks, Arif. I want to go to Peter because we've talked a lot about Asia. What's driving the latest wave of LNG demand across Asia? And the big question, again, the speculation, is it sustainable, Peter?
Thanks, Stephen. Yeah, I mean, as I kind of intimated before, and as we discussed when looking at these polls, it's all to do with the sort of price sensitivity of demand and how durable that is sort of long term. So maybe just to add to the point, I mean, first, it's very interesting, Sam's opening slides there, seeing the decline in China, whether that's something that is kind of a flashing warning sign for the LNG industry, because beyond South and Southeast Asia, China's drawn in a lot of the world's LNG. Actually, with Europe and China, they've accounted alone over the last decade for 80% of LNG supply growth. They've hoovered it all up. So, other regions we can discuss, how sensitive they are, how much they can pick up at lower prices, but these are the kind of workhorses of LNG demand. And of course, Europe, it was because of the massive shock after Russia's invasion of Ukraine. In China, it's been kind of the engine was industrialization and gasification of different regions in China. Whether those are the same going forward, you can cast sort of doubt on both of those aspects, how much more growth there is. Now, it's anyone's guess how much more demand China can absorb. The contribution of gas in its power sector is tiny. And will likely remain so, even if prices fall, because you really need sub $5 gas to get gas into the power sector at scale. Elsewhere, it's a question of industry and at what point they sort of bring in more volume. And of course, there's been these sort of green shoots for demand through transport, through LNG trucking and so on. So China really sort of a wild card. But as we know, and as the last week has shown us, China's absolutely able to bring in more pipeline gas from Russia, and that's a massive wild card for the industry. If you add 50 BCM from Power of Siberia, like just taking the numbers at face value, 50 BCM Power of Siberia, another sort of 6 BCM from the existing line, plus the Far East pipeline, which adds another 12. I mean, you're looking at China being a very sort of large, possibly overcontracted player in the market. And just to sort of finalize that point, what is the structure of contracts today? Who is signing up for deals and offtake agreements? It used to be that the offtakers were the ones that were actually burning the gas, but now, there's a lot of intermediaries between supply and demand, and that helps LNG become very flexible, but it also means that, LNG doesn't have a sort of firm home. Qatar hasn't contracted a huge amount of the gas that's under construction. The US, it's all optional, it's all flexible, it's all sort of a lot of it's taken by Shell and those large portfolio players. So it's really a question of who's going to take all this gas in Asia as well.
Right, that's a very good question. Sam, right at the beginning, you talked about FLNG. Can you basically describe fairly briefly, if you will, how advances in shipping FLNG and bunkering reshaping, how are they reshaping the infrastructure landscape?
Yeah, I guess I'll probably speak more about on the demand side, so floating storage and gasification units, which has obviously been a hot topic in the market for a number of years. It kind of came back again with Egypt early this summer. the global LNG market has a flexibility problem, a short-term flexibility problem, where kind of often we see things like focused storage, especially when we've had a period of underground gas storage not being able to provide that flex in Europe, which was basically the global balancer for quite a number of years. FSRUs are great. They're very quick. There was quite a high supply of them. There's now actually quite few in comparison to how we were a couple of years ago. They don't have that much storage. And we have one of these problems where we kind of can't see the same stock build. Yeah, this is a small proportion of kind of what overall storage on the gas or LNG side looks like in the entire global market. But it kind of starts to eat away. For most of these FSRUs, you have to clear the entire facility out. The entire storage facility before you can take a new cargo, usually just keeping it a bit of heel. And so it's one of the things that we lose that little bit more flexibility. Like, they are great, but often they come instead of onshore facilities, which do tend to have much greater storage capacity, and we have the same forced regasification and forced drawdown of stocks that you would have with the onshore, with the FSRU. Sorry.
Okay, thank you very much, Sam, for that. And the last discussion point, which I find so interesting, the role of digital innovation and decarbonisation, the technologies involved in those. What is their part in the sector's evolution? And Bill, starting with you, and very briefly.
Yeah, I'll be brief. It's basically Europe has introduced on the decarbonisation side, plans to limit methane emissions within the supply chain, and that is going to be a challenge when you try to find equivalency with the US, which is going to be a major supplier to Europe, and other suppliers potentially as well, including Qatar. So that's one of the big hurdles that's going to have to be regularized over the next few years. Those regulations are coming in. They don't necessarily stand as forces that help the growth of the market necessarily, but we have to see how the politics of that plays out.
Okay, and Dan, briefly again.
Yeah, so from my point of view, there's three main ways to decarbonise LNG. So the first is in the upstream, capturing the methane that has been leaked. We're seeing certified gas move forwards, especially in the US. CCS, this is a real important solution in Asia and Oceania, where projects have got high venting emissions. CCS can capture those and store them underground. And then the last one's electrification, both of the upstream and the liquefaction. LNG, it takes a lot of energy. And so if you can have an electric drivetrain powered by a low carbon grid, they can reduce emissions quite substantially. Unfortunately, these can be quite expensive. So I'm not that positive on a lot of these going forwards, especially given LNG has a lot lower emissions than other sources like coal.
All right. Thank you, Dan Toleman. Thank you, Bill Farren-Price, Samuel Good, Arif Hirji, Peter Zeniewski, for great contributions from a talented and very knowledgeable panel. There's no doubt, as Daniel was talking about, digital innovation and decarbonisation technologies are central to the LNG sector's evolution, which is becoming a sort of a tapestry woven from challenge, opportunity, resilience, reinvention, and as Arif said, expediency, if you like, expedient alliances. Qatar remains the region's leader in LNG, but the UAE is expanding its global footprint. Thank you so much for everyone for attending this webinar series supported by the Al-Attiyah Foundation in partnership with London Stock Exchange Group, Data and Analytics. We look forward to welcoming you to future webinars. Can I encourage you all to fill out the post-event survey, which will be shown on the screen in a few seconds, or it can be filled on the same event page as well. But for the moment, from me, Stephen Cole, and all the team at the London Stock Exchange Group, Data and Analytics, many thanks to you for joining us.